Here's what I think you will get after watching this episode. I think you know what to look for when it comes to altcoins and why they are going to be outperforming Bitcoin in the coming months. You'll have a basic understanding of addressing and assessing BTC valuations and compounding your returns, and you know my absolute favorite coins when it comes to the crypto segment of AI. It's one of the hottest topics out there, which is AI or artificial intelligence, and has been yielding some incredible returns when it comes to the markets, as we have seen Fetch doing really well, and some other projects are also waking up. However, the ultimate question is it still interesting to invest into this segment, or is it better to adjust towards something else? And if you want to invest, what should you be looking at in terms of analyzing the charts, making sure that you're not the one to be the last one investing into the coin in which you're getting dumped on? That's what we're going to do in this chapter of Finance Forward. We are going to investigate the essential parts of investing through the markets or into the markets through the charts, and I'll give you guidelines on what you should be looking at in terms of strength on the altcoin markets. This is essential and is independent of the market segment, but it's super important for your own portfolio. After understanding the rotation and the Bitcoin valuations, we are going to be diving into everything surrounding AI and my top 5 altcoins I would like to have in this segment for potential investment opportunities. Before we dive into this content, I want to share that we've got our own trading course. It's live. It is designed and it is going live, or went live, prior the actual Bitcoin and Ethereum bull run. Especially, we wanted to make sure that we launched it before the altcoins were going to wake up, because you need to have a few key metrics to making sure that you get the maximum out of the markets, through which I share everything that I've learned, my trading strategies, portfolio management, risk management, technical analysis and mindset, and more that I use to generate my yield trading altcoins and compounding those returns. So that's all in there, and it is live. It has a beautiful discount, which is only going to be limited. You can check it out in the description beneath, and you can check out what's all in there. Also, I'd like to make an agreement with you. If you subscribe to this YouTube channel, I'll make sure that I continue to post content to make you a better trader and investor, to make you more ready for a financially stable future. It is going to be essential because the markets are going to rotate. It's going to be euphoria. It's going to be volatility. You need to make decisions, and I want to make sure that you can do and make those decisions based on what I've learned and what I'm sharing, because I'm essentially doing the exact same. So we're going to continue pushing this forward. New team members are coming in, new production is coming in, new content is coming in. So if you subscribe to my YouTube channel, I'll make an agreement with you that I'll do the best that I can. Now, let's get started with today's Finance Forward 5. So before we continue, I would like to do a general market update, which, if you're looking at the markets for the past week, there are a few important factors. First of all, we know that Sam Bankman was sentenced for multiple years. And then we had the other one, which is CZ, which was going into court in Seattle earlier this week, in which he was thanking everybody for his support. And to be fair, CZ accomplished a lot for crypto. He created something that urged everyone to use Binance, and to be fair, even after he left, Binance is still by far the best exchange to be used, and he has been educating a lot of people. He has been giving a lot of jobs. He has not been taking any clients' funds at all. He's not been doing that many wrong things in such a way. He has been paying a huge fine for everything that they have done, and still he needs to go into court for 4 months. 4 months. Of course, we need to do it, which I think ultimately is something that is very bad, because if we compare this to traditional finance, and if we compare this to the sentences that people get for fraud in the Web2 world, I think they are not getting it. It is just showing again that there's a threat in crypto, and that the regulators are just not fancy in crypto, because if more people adopt towards crypto, then you can just throw away the financial system as a whole, through which they want to sentence everybody. And CZ is actually really an OG that has been doing a lot of good things for the markets. So in that aspect, I think that the industry is indeed changing towards a new phase where compliance is super important, where privacy is getting done. Hopefully through SSID we're going to get there. But yeah, CZ got his sentence of 4 months in prison, and he mentioned that he's just going to sit it out and then he comes back in, and I think he will be fine by doing it. Now there's also a case of, and I've got the Arbitrum chart up here, but we also got a case of the markets correcting. So if we look at Bitcoin, it is correcting. And you should notice I've been making this video during the actual FOMC meeting, which technically has a terrible impact on the price action of Bitcoin. But I think that a few conclusions can be made. So the first one is, if we break through this entire range and it's not cascading as we have been seeing in previous corrections, then it's a very gradual correction, and then there's a likely case that we're going to rotate back up, but we're going to rotate back up with altcoins. And I think that the chances of altcoins to start running from here are significant, and I think that the chances of having a lengthier cycle are also significant. So there are a few reasons why Bitcoin has been correcting as a whole. And the primarily one is the FOMC or FOMC, which has been taking place on Wednesday evening, in which they said that there are not going to be any rate cuts at all, or at least there's not going to be a rates adjusted. The speech of Powell is all going to be deciding whether or not there's going to be a rate cut. But independent of that, crypto is always very negatively correlated to the FOMC. Usually it drops prior to it, and usually it bottoms out after, and then it rotates back up, in which I think that if we look at the Bitcoin price action, we have been seeing a run from technically 40k to 74k without any correction. So the fact that we are seeing a correction right now, in which we are just having barely a correction of a little more than 20%, let's see, 23%, which is technically still fine. I think it's just it's showing that Bitcoin is getting into a more organic and natural price action overall, and it's just getting back to the gap it created when it ran up. If we look at the indicators, I think either this range or secondly this one is going to be the level that we're going to be bouncing from. The final sort of level that I think in the worst scenario is going to be the level in between these two. So in the worst case scenario, we are going to go to 49k, maybe at a later point in time. But I think that we are close to a bottom, especially since we are not crashing out of this range. And if you look back to this range of period, we started to crash substantially, in which we have been doing this on and on and on from range corrections. So I think that if this happens and we consolidate, it's going to stay for a long time. And I'm saying I'm not expecting any breakout from Bitcoin until at least, August, September, maybe October. And if that is the case, that is exactly the window that we're going to see altcoins searching up. So if we talk about scenarios, if Bitcoin is going to correct and comes back up all the way here and corrects again, then this correction is going to be painful for the entire market. And if we start rotating back up and it's going to be Q4 or maybe even first quarter of Q5, you can conclude that this is going to be a lengthier cycle. If we're going to rotate back up and break up in August or September, I think you can say that the 4-year cycle is pretty much on schedule. But to be fair, if Bitcoin is going to stabilize in any of these two regions, and I think in terms of correction, most of the pain is in, I think if we rotate back up, it is going to be a rotation into altcoins, which are going to do really well. But multiple events are taking place that are important to understand. So this week, it is all about job openings. which and the unemployment data, which technically starts to become worse. Job openings, number of job openings during the reported month, it is starting to decrease pretty heavily, as you can see. That is not a great sign. We're also seeing terrible numbers. We also saw last week with the GDP data coming in 1% lower, and I think it will be adjusted even lower, through which the recession fear is going to increase. And because the recession fear is going to increase, the chances of having a rate cut is going to be increasing as well. And then you get a theory of, if we're going to get a recession, or the chances of having one, that is going to be a window where Bitcoin might actually start to do well as a safe haven. So it's all about these important events during this week. FOMC, of course, as well. And the FOMC has been giving its price action prior. Then we also have something else, which is the approval of the Bitcoin and Ethereum ETF in Hong Kong and China. So the expectations were similar to the US one, but that is just bullocks, because the size of the markets of Hong Kong is like 0.5% of the size of the US. So if we get an approval, you need to, as Eric has been doing, you need to compare these two by actual valuations. So if something is valued 0.5% in terms of size, then you need to multiply the actual value by approximately 200x to make sure that these two are compared. So what it says here is that the inflow was 123 million on day one, which is already into the top 6 of 82 ETFs that have been launched in the past 3 years in Hong Kong, and in the top 20% overall, which means that also in Hong Kong and in China, the interest into the Bitcoin ETF is substantial. And additionally, it even increased to 200 million, as you can see. Additionally, the Ethereum ETF was approximately 15% of this, which means that around 30 million has been going into Ethereum. And then we also have the debate of Ethereum ETF to be approved, not in May, but in August. So I think that markets are literally overestimating all the price action. And I think if you look at the total market cap at this point, we were overextended by a mile. And I think that we're currently having a relatively normal correction taking place, which is close to a bottom. It's down 24%. If you're looking at the total 2 market cap, we hit resistance and we might be going down another 10 to 15%. But technically, if you're looking at this price action, we are getting to the range low of this entire block. As you can see, you'd see the wicks here, and we are actually getting into these wicks too. This means that, especially since we have been having a correction of 29% here, and if you use the total 3 chart, which is excluding Bitcoin and ETH, we get into the crucial area here. We get to the bottom of this range as well, and we have been anticipating a correction of 29%, which I think at this point we are closer to the end of this correction, expecting altcoin rotation to be happening rather than continuing the correction, because we are in the middle of a bull cycle and altcoins are at the actual beginning of their bull cycle when you compare it to Bitcoin. But that topic we're going to be discussing in the next part of this episode. So the 4-year cycle is still taking place on the markets. And the question is, are we going to have a 4-year cycle? I truly believe that because of the fact that the altcoins are having a longer bear market, there's more liquidity needed to actually move the markets. And because of the fact that there are institutions in the markets right now, it is going to be more difficult to actually move the markets, which means that I think that the chances of having a longer cycle is definitely available, which means that I think that the higher the cycle will go, the more upside that you can generate. So there is a question whether you can have a diminishing return cycle. I think that is not the case, because there is more liquidity going into the markets, through which the upside for Bitcoin is higher than what we are assuming at this point. And that's quite often what you see in the markets. If you would ask someone at the end of the bull cycle when Bitcoin is perhaps 300 or 500k, and you would say, where do you think that the markets are going to land? or finish in the bear market, then you probably are going to get an answer, well, 100k, 200k, somewhere in that ballpark. Which is similar to asking in the previous cycle where people suggested that it's going to land around 30k and we went to 15k. And the opposite is also true. The upside is higher than what most people are expecting right now, especially when you talk about altcoins. And altcoins have been suffering. Altcoins have been crashing. Altcoins have been seeing a correction of approximately 70% since the ETF launch on Bitcoin, which is truly a devastating correction. Usually people will leave during this period because they just don't believe that there's going to be a lot of upside left for the altcoins, which in some way is definitely true. If you are buying some specific meme coins, I think that there is a very slight chance that they will be correcting back up. But if you are in fundamental strong altcoins, the fact that they have been going down is because people were rotating towards Bitcoin, and that rotation is going to go back into altcoins. While at this point in time, the sentiment is probably not saying that we're going to have that actual rotation taking place. Price moves first, narratives follow after, which means that if I go back to where I was previous cycle, I had the exact same mistake. I was too early getting into altcoins. This cycle, I think I've done the exact same. I was relatively fully allocated into altcoins a bit too early. That is not bad because you get the opportunity of making your money back because in a bull market everything goes higher. But if you think about it, if you are having a position like Arbitrum or Chainlink and you have a position of $10,000 into that and it triples against Bitcoin, you have 30k. But if it goes to and you rotate it back into Bitcoin and Bitcoin goes another 4 or 5x from here, you transfer that 10k towards 120 to 150k. So what I'm trying to say is that if you are having a case right now where you feel like, oof, am I doing the right things at this point because the markets are so far down and I've been losing a lot of paper money or at least value, then yes, I'm in the same path at this point. I've lost again a lot of money, but ultimately you get the chance of making it right in the bull cycle. But in order to do so, you need to structure the plan for yourself and you need to make sure that holding altcoins is not going to be sufficient for the rest of your life, but buying them right now, fundamental strong ones, are making more Bitcoin through which you can change your life by learning from your mistakes in the past 6 months and by being able to execute the trading in a better way through which you will be able to actually defeat around 90% of the people that are going to be in the market. So that's why I keep on going for ages on BTC valuations, making more Bitcoin, buying the altcoins right now, because it is actually the easiest gateway of making more Bitcoin. And until further notice, you want to make more Bitcoin. So what do I mean by that, and when is the rotation going to happen? Let's get towards the charts where I start to explain the effects of an actual altcoin run is going to happen and what the effects will be for your portfolio. Now, the rotation is something that is super important to realize because you can make a ton of Bitcoin, and by making a ton of Bitcoin, you can actually leverage yourself in the bull cycle and making more return in dollar. But I think ultimately you want to have more Bitcoin and you want to make more Bitcoin through which even if you want to sell your Bitcoin for the US dollar at the end of this bull, you can still make more Bitcoin by selling it towards USD and buying back lower. So then you end up by having more Bitcoin, which then theoretically brings you to the actual target. All right. So when we look at listings and when we look at lengths of cycles, I want to show you the Ethereum chart, which technically shows you a lot of things that you need to make into, or what you need to be aware of, which is important to realize. And then I want to share some other charts as well, in which the halving is always an important event. And then there's also a case of these compounding returns through having altcoins and then rotating it towards Bitcoin. The The first thing that I want to address is the fact that you are looking at ETH against Bitcoin, and there are some bars over here which show the length of a bear market and the length of a bull market. So in this case, if we look at 2016, 2017 in terms of market cap, this one was approximately 9 months of bear market, after which we saw a bull market of 6 months. So here we can see that we have 24 bars of weekly upwards momentum. If we are going to add this to the potential return, it went 20x. Then we started a bear market with a slight bump in between. But we started a bear market which bottomed out on September 2019, which was more than 2 years slightly, after which a bull market enhanced that took place for more than 2 years as well. Very comparable in terms of length, which is comparable to this one too. And then it yielded a return of approximately 4.5x. So theoretically, you could say that Ethereum, it becomes larger, has diminishing returns because of that impact, against Bitcoin at least, which is your base coin or your base asset. So because it becomes larger, the returns are lower and it's harder to actually make a high return with it, but it becomes a solid investment as well. So therefore your risks are less, but your reward is also less. So now if you look at the current scope, you can see that we are in a bear market for approximately 900 days, all right? Which is longer than the previous one, which then automatically also means that if you can calculate the length of the next bull cycle, by knowing that Ethereum became large and the impact of the next narrative will be larger for the entire market as well, you could suggest that the length of the upcoming bull market is going to be very comparable, which means that if you take it towards 900 days, the peak of Ethereum against Bitcoin is likely going to be somewhere in Q4 of 2026, which then means we still have 2.5 years to go, which is entirely different than what we have been seeing with the 4-year cycle. But I think the 4-year cycle is just nonsense because macroeconomic events are going to have a heavier impact as a whole. Now, what is the impact of the halving? Well, the halving in itself is showing that what are the other events that Bitcoin actually has? A spot Bitcoin ETF, which we saw pre-halving, which then also shows that because the pre-halving spot Bitcoin ETF was launched, due to that, the altcoins were sold off and went towards Bitcoin, through which the Bitcoin halving takes place. And usually just prior to the Bitcoin halving, the rotation starts to happen already because people see that the valuation of altcoins is quite far away from the valuation of Bitcoin. So they are undervalued and there is an actual opportunity to make a return on your investment. And that's why people rotate from Bitcoin towards altcoins to make more Bitcoin. But now that sentiment on Bitcoin was super strong. So in this scenario, we've seen Bitcoin going through the roof. We've been seeing Bitcoin going to 74k, a new all-time high pre-halving, through which I think that there's also going to be a way higher number of Bitcoin to be valued in this cycle as a whole. But because we saw the strength of that sentiment being super strong, I think that the rotation is only going to happen when the sentiment fades away. And the sentiment is currently fading away because a correction takes place, inflow stabilizes, China ETF is not going to be pushing it forward, macroeconomic events in terms of FOMC is having an important effect on it because institutions are moving the markets. So the rotation is still comparable around the Bitcoin halving, and we saw it here as well, just like 6 months before. Here we even saw a sell-off, but if you go towards other altcoins, you'll see the same. So the rotation happens later, but the rotation will still happen because what is there left for Bitcoin at this point? Not much, aside from being the base bear to make more Bitcoin during the actual bull cycle. So ETH in itself has been having a super long bear market, in which I think that the upcoming bull market is going to be longer too, because the narrative is going to be stronger and the adoption is going to be heavier So the impact will be larger. So if you look at narratives, and if you look at something like Bonk, you actually have to get a good chart. If you look at something like Bonk, this one has been going up since October 2023. Is a little bit dying, but until March 2024, it technically peaked, which means that it saw its run for like 5 months. If we see some other narratives that have been waking up, for instance, Fetch, which is currently, whether you like it or not, it is dying down. I don't believe that there's much upside to be made unless we get all the way back here, but then it's already a new coin. It started to run in October 2023 as well, and it lifted until March 2024. But the impact of the narrative is slim. So this first run is comparable to Ethereum in 2017, through which the narrative is small, the upwards bull market is relatively small too, and the bear markets are relatively long, and then the bull market becomes longer too. That's what you will be seeing with many of the layer ones here now as well, and that's what we're seeing with Ethereum. Now, if we look at compounding your returns, if you are looking at a scope like Chainlink, and I always use this as an example, it's super easy. What it shows is that from the bottom in 2017, it has been into a bull cycle until August 2020. But if we take it from here, we have been witnessing a bull cycle for approximately 2 years, and we are currently experiencing a bear market for, let's say, 3 years. Actually, if we take this one, it is even more. It's 3.5 years. So if it rotates back up and it gets into a bull cycle, the bull cycle will be way longer than the previous bear market, in which the impact of Chainlink is going to be more sufficient. So you could say RWA or DPIN or anything comparable to it. However, if Chainlink is going to go anywhere close to being back to the all-time high, we might be making more than 6x in BTC terms. Now, if we go back to the previous cycle and we discuss the actual impact that BTC valuations have, we know that Chainlink has been peaking in August 2020. And if something goes as vertical as we can see here, then because it is chasing itself so vertical, you should always start scaling off. And when you start scaling off, you technically want to scale off into an asset that has barely been moving at all, which is Bitcoin. Or which is the safe asset. It's not USDT, because I will just explain it in a very easy way. But if you have been getting your altcoin and you have been holding your altcoin, you make more Bitcoin, you want to make sure that those profits in Bitcoin are going to be rotated back, those profits in the altcoin are going to be rotated back to Bitcoin, because if you stay or you keep that money into USDT, you will lose Bitcoin by having USDT. So if a correction happens on Bitcoin, fine by having USDT. It is the time to get into the market, and it's also the time to buy your altcoins, because that is what you want to get, and then you rotate those altcoins back to Bitcoin. Now, if we use this as a proxy or as an example, then we could suggest that because Chainlink has been having itself in a bull run, and it peaked in August 2020, and if you compare the valuation of the altcoins right now to that period, you could say that we are somewhere in this peak bottom period, right? We are doing the exact same. So we are somewhere here in which it's done a 63x. All right. Okay, I get it. It's a little bit too much. But if you would suggest it has been doing a 10x. If you would have been putting in 1 Bitcoin during this period, September 2019, I'll just do the calculations for you. September 2019, it is here. It is $10,000. So 1 Bitcoin, 10K into Chainlink. Then you get out of that, you get 10 Bitcoin back if you start selling here. It's a very hypothetical scenario, but I just want to make sure that you get it. 10 Bitcoin at August 2020. You rotate it back into Bitcoin at August 2020, which is here, which is, well, 100K. Then if you keep that 100K in Bitcoin, you would have been doing another 4.5 450% from there. So that 100k became 450k, or at least $500,000. So out of $10,000 or one Bitcoin, you did a 50x by simply holding Chainlink and swapping it to Bitcoin to compound your returns. So you don't need to chase a 100x altcoin. You don't need to chase something that is just going bazooka, which is definitely a chance. But if you have an altcoin, and if you look at some altcoins that are very solid, I'm always referring it back towards Arbitrum. If Arbitrum, and you put in one Bitcoin at this point, or a relevant number in the size of your portfolio, and it goes back to the number that we witness here, or the high that we have here, then you might be getting back 3 Bitcoin, and that 3 Bitcoin at the end of the cycle might be worth 1 million, which is a 15x for your portfolio. So what I want to make sure by showing this data is that at this point in time, with all the altcoins, they are super undervalued when they compare itself to Bitcoin. And because of the fact that they are super undervalued, it is a very reasonable strategy to be allocating funds into them, and to also making sure that, and that is something that I did wrong in the previous cycle, is that once you start to make your investments into altcoins, you need to make sure that you're actually going to have a plan prior. For instance, if you allocate into Chainlink and it does a 2x, take half out. If it does a 4x, take another half out, etc., etc., etc. Because you don't want to hold your altcoin, but at this point in time, based on the events that we have, been seeing, Chainlink or altcoins in general are super undervalued, can make more Bitcoin, and that is it's the ideal time to actually do that. In the next part, I'll be discussing my top 5 AI altcoins. I've been briefly touching up on one, but I want to make sure that I use all the data that I have for the ones that I think are going to be beneficial. Our mission is to provide you all to achieve financial freedom and stability through crypto. When I started, I felt overwhelmed and I didn't have all the tools that I needed to actually make good trade and investment decisions. That's why we've created a trading course prior to the altcoin bull markets to prepare you to making sure that you make the decisions that I wanted to make in the previous bull cycles. The trading course provides you with all the insights from my 7 years of experience in the markets. I share my personal trading strategy. I explain everything surrounding altcoin investments, risk and portfolio management, but also technical analysis on how you should be able to decide which altcoins to invest in, and more importantly, when you should be selling those. In a 7-hour course with all the essential parts I wish I had when I started trading and investing in the crypto markets, click on the link in the description below to see what the course consists of, and make sure to reach out through our website if you have any questions for us. In this part, we're going to discuss my top 5 in terms of AI altcoins, which I think are having a connection with multiple aspects of the markets. It might be DeepIn, it might be modular blockchains, it might be RWA or DeFi. I think AI will be integrated into many market segments, through which I think that's super important to understand that there is not one actual AI project that is solely AI, because AI is being used in all those segments. Now, if we look at that particular part, then there are some interesting altcoins out there that have been showing a lot of momentum. For instance, Fetch has been doing great. Ocean has been doing great. Render has been doing great. But that doesn't mean that they have been doing great, that you need to get into that actual position, because by the fact that they have been doing great, you need to ask yourself, if something has been going as vertical as Fetch, and it is approaching a big event, but it went like 10 or 20x, and then it is currently down 30%. What are the odds of the actual asset going up another 2x from here, or dropping by 50%? You need to ask yourself that. And if you ask yourself that, and the chances of fetch dropping by 50% is larger than something like near. And then on top of that, if the chances of a 2x in fetch are slim compared to a 2x for near, it then also means that there is a higher upside to be made by having new AI coins that are connected into an ecosystem or into a space that has not been seeing any momentum at all, through which I think that there are better opportunities out there. And that's why I wanted to touch upon 5 coins that I think that are super important to look at, not only because they are AI, but also because they are a connection to something else, or that the chart has been running up, or they are fully diluted already. There are multiple arguments. First one that I wanted to bring up is Near, which is a chain abstraction and also a toolkit blockchain that is integrating AI within there. It has combined AI for the toolkit where developers can build into the Near ecosystem, which technically has been taking off a lot, through which you see that new blockchains, and I think Near is also a little bit into the modular blockchain space, are taking off momentum significantly. And you know that my personal favorite is still Polkadot. Cosmos also has the toolkit, and Near is a relatively new one, which integrated AI, which also is truly developer owned, which is transparent, resilient, and the valuation is relatively low compared to Solana or any of the other layer ones, through which I think that Near in itself is something that is going to do really well, especially if you look at the current price action and you compare it to what something like Solana. We technically are somewhere in between. If we compare it to something like Fetch, we are technically somewhere here before the big breakout occurred. I'm not saying Near is going to pull a 7 or 8x, but at least it's showing that we're still barely waking up when it comes to the USDT valuation, which is currently consolidating and still is likely to make a breakout after that, because you need to look at the BTC valuation, which is just barely starting up a bull cycle, needs to crack a few important levels, and once it starts to crack these important levels, then I think it's going to accelerate, because then it gets into this range, through which I think we're going to do this move based on that impact on the TA part, which is a doubling into your BTC valuation. So I think that is the first one. The second one is AI, is decentralized machine learning. I've not been covering it too much yet, but it is one of the strongest projects out there, and I think it will continue to do so, in which it is also a mining network comparable to Bitcoin. It is a staking network, through which, by the fact that they have these two, the liquidity on the markets is relatively low, and because of the fact that the liquidity is relatively low on the markets, you can also have really big shocks in terms of price action. But I think the conclusion is still the same. Newer coins yield higher returns because they are newer, no back orders, price discovery, all these things. Tau is one that I think is super fancy to have in your portfolio, and the reason why I'm discussing it right now is because it is down a lot since the all-time high. It's down a lot since the Binance listing as well, in which we have been, I'm actually looking for the price, there you go. It has been dropping approximately 55% since its latest all-time high. It has been seeing the exact same previously, and if you start looking at BTC valuations, which is kind of hard to do, there's still a lot of uncharted territory to be made. So it is very likely that Tau is close to being into a bottoming procedure, and then you get into the same question as what I just discussed. Is Tau going to yield a higher return than Fetch? And is it going to have a lower chance of dropping as much as Fed can be dropping, which I think is actually the fact. So that's when you want to allocate a position into Tau. Most preferably, it might still drop all the way towards $300, but if it does, then you can just continue to accumulate your position, because at the later point in this cycle, I think Tau is going to be valued around $1,000, probably more. The third one is AI compared to media and entertainment, gaming, and it's compared to, well, it has multiple narratives, as I mentioned, media, gaming, metaverse, which is combined with AI, a cloud. But then there's also a unique aspect here, which is different than the coins that that are connected towards Ethereum, because, for instance, Arbitrum is having a high level of inflation. Teta doesn't have it because it's completely fully diluted already. And because of it being fully diluted, it has a higher upside to be made, especially if you can do a lot of things as a utility with the actual token. You've got Teta Fuel as well. So there are a lot of incentives to have this into your portfolio, through which there is a higher upside to be made if something is fully diluted, because it lowers the amount of sell pressure being executed with the actual asset. So in that aspect, when we look at the price action, again, it's very comparable to what we witnessed when it comes to Solana or to Fetch. So for instance, it has seen its first run since October, correction, second run, correction, and most likely a third run, which is probably going to break it all the way towards $6, but likely, and I think that's a reasonable target, $9 to $10, which is from here a 4 to 5x. No, I want to check the BTC pair. In which the BTC pair, which is also different and it's comparable to things like Chainlink, it has been into a bear market, and I discussed it in the beginning of this video. We have been in a bear market for approximately 2.5 to 3 years. We've seen a slight bump, corrected back in, which was during February, had the first bull cycle run, through which we're currently consolidating and making itself ready to attack all these highs, through which I think that we are either going to stop at this point, which is enabling a 2.5x, or we're stopping at this point, which is, and then we get towards the exact same level, which is a 350% price increase. If you compare that to the price action here, 350% gets you to $9, independent of what Bitcoin is going to do. The fourth one is a relatively small one, but it's AI based as a privacy solution compared to the project that is into DeFi. You need to also make sure that none of these projects I'm partnered with. It is just my view. I don't have any partnerships. I don't have any marketing deals. It is just literally what I think is going to be an interesting impact into your portfolio if you are interested into holding AI coins in your portfolio, which I think is not a bad idea to do so. I have some of these in my portfolio, which are not technically there because of AI, but they are there because of a different reason. This is a DeFi protocol that is a relatively small one, not on centralized exchanges, completely decentralized, has a lot of upside to be made. And the fact that I'm discussing it here as well is the same as with BitTensor, because it has been seeing a lot of momentum. As you can see here, it has been grinding all the way back up from around a cent or even lower, all the way towards 50 cents. It is a market cap of 220 million, which I think is going to do really well in terms of valuation, in which I think that based on this market cap and based on the fact that this is growing extensively and DeFi is going to be a segment that is going to be waking up in the coming period, this one might be doing another 4 to 8x as a possibility. The final one is Covalent, which is also integrating AI, which is also a comparison into modular blockchains. So you've got Celestia, which is also a great one, but then there is also Covalent, which is a comparator of Celestia. So if Celestia does well, Covalent is going to increase in terms of price action as well, in terms of value, and likely is going to provide a higher beta because of the fact that it's a smaller capitalization in terms of market cap, and therefore can generate a higher return. The fact that I'm discussing it is also because it has been seeing a massive correction, but there are a lot of fundamental aspects going to be happening in terms of this project as well, through which I think that it's just seen the first run in the bull cycle. It's seeing a correction right now, and the next bull cycle run is likely going to bring it to any of these two levels, which from here is another 3 to 6x taking place when you are going to be holding this actual asset. The only concern you have is that it's going to take time. Right now you don't feel certain about those positions. The sentiment is super bad. It is still a multi-year bear market for altcoins. The valuations are on the ground and they have been correcting by approximately 50 to 80% when it comes to USDT valuations. And because of that, it might not feel certain to actually have these coins in your portfolio. But now is the actual time to start buying them. And I think by these or taking a few of these, you're going to be off as one of the biggest winners into this cycle, in which you can also allocate funds towards some other assets. But I think this is valuable, which I would love and I liked it to be sharing it with you. I hope you have been enjoying this video and I have been providing content for you on your journey towards a financially stable future and freedom. If you did enjoy the video, can I ask you for a favor and comment beneath what you liked, what's your feedback, and what type of topics you would like to see in next episodes on Finance Forward. All your feedback is helpful by building this content and this YouTube channel towards the next level, in which we aim to provide better and better content. Thank you, and I'll see you on the next video next week, in which I discuss more on everything surrounding crypto, Bitcoin, and altcoins.